Hello everyone, Friday 29th, 10:42 as I start recording this video. I want to get into it right away because this is going to be very powerful, guys. I'm going to start sharing with you. Let's dive into the charts. Let's see the charts right away. I want to start. I'm going to start just talking to you about how I see the market. I'm not going to even try to teach you anything. Anything that is new to you, please go back in my old videos. I have a lot of educational videos. Now we are just going to talk and share and just have a conversation about the market. That's how I'm going to start making these little videos. If you're new, welcome. I only trade gold, and we have seen this behavior that I want to explain to you because throughout the years, I have developed a trading plan with a strategy that has powerful impact on its efficiency. Okay, I have finally started breaking through, and I'll say it humbly, I've been trading for more than 5 years, and it's been only not so long ago that I have polished a nice trading plan. So let's get into it. How do I see this behavior? Very awesome support being respected, future resistance being respected, and this is where the magic is in. Okay, we could have anticipated this, people. We could have gotten a beautiful entry, or we could have also learned that that was not a change in direction and that the trend is your friend. Okay, I'm sure you've read that or have heard that before. The trend is your friend. It's a basic trading principle that makes sense. Okay, now how do we do this? What's number one thing I would do is mark this previous high over here, that range, the resistance of this range, and as you saw, obviously this support that was being respected throughout London's market. Now I want to bring in the market sessions because that is part of our strategy. That's part of my strategy. It's part of my trading plan. Is just analyze market open, specifically New York. Okay. But before that, let's study the market from this area that it was trading during Tokyo session last night. I am in a New York trading time, so to me this was at night, and I'll show you again. That was Tokyo, and this was Sydney. I don't have Sydney because it would be too much, but London, this was London's high, London's low that tested Tokyo's high. And if you've seen my past videos, you have learned that it's powerful to know that every market session tends to retest the previous market's range. I'll say that again. Every trading session tends to retest the previous trading session's range, whether that's the high or the low. And that's exactly what happened. Look at that. That's awesome. We're gonna get into that in a little bit, but that's what happened. That's what happened this morning for me. And let's keep going. So if you, this was 2, 3, 4, 7 a.m. This was 7 a.m. I always come into the charts between 7:30 and 8 a.m. So let's study the 15-minute time frame. But before that, let me point out something in the 1 hour time frame because it's important. And that is, this imbalance. Oh, what's imbalance? Go back to my videos. Notice how the market respects that beautifully and perfectly. With the bodies of these wicks, of these candles, closing within that range, and the wicks just showing rejection. So what are the footprints that I want to talk about in this video? These behaviors and little clues in the market that are the footprints. And footprint number one, in 1 hour time frame, when it comes to this push, because remember, I'm here at 7 a.m. I was not looking at charts at 2 in the morning, 3, 4, 5. I'm here. So to me, what is the first footprint? It's this wick. I saw this wick form before the New York market hours. New York opened in the next candle. So this was the opening of New York. That to me was London's low. And check it out on the 15-minute time frame what New York does. Opens New York with this candle. It retests London's low and it pushes back up. And not only is London's low its retest area, but it's that retest area because that was the imbalance that we showed in the 1 hour time frame. You see that? So that is footprint number two this week. London's retest to New York's low and failed to break it to continue going up. And that is something I also have said in my previous videos. Always study where the market opens in relation to previous market's range. I'll repeat that, and I'll make this more pleasant to your eyes so that you can better capture a picture. This range, right? I'll take the wick and everything. What is that range? That's London. That's London's range. London opens here. It makes this high and this low. New York opens. Where does it open? Does it open in the middle of the range? Does it open up here? It opens closer to the bottom of the range. How do we know that? Well, we could grab our Fibonacci retracement. Doesn't matter where you put it up or down. We're going to look for the 50% retracement area. And New York opened right there. Under the 50%, pretty much at the 30%. That means it's more likely, this is not certain, but I have seen this throughout the years. New York session tends to retest London's range depending on where it opens in relation to that range. New York opens at a 30% retracement of the high to the low. Therefore, it might want to grab liquidity to the downside to further retest up. Why would it want to do that? That's where we're going. Okay? Stick around because that's where we're going. This is powerful, guys. I'm going to get this out of the way. We saw footprint number two. Footprint number two is this wick. 15-minute time frame. And then, boom. Awesome closing candle into this range once again. So what is likely to happen here? For that high to get retested and possibly broken. What high am I talking about? This range, this resistance area. Right there with the wick. Okay? So it reaches, makes another pushback, and what does it show? Rejection to the downside. The moment this candle closed, check this out, guys, this is price action. The moment this candle closed above that blue line that I just drew, I'll make it thicker. The moment this candle closed above these bodies, that is an intention of it wanting to retest the last bit of that wick, but more than that, to go higher. Because if the market had closed under that line, that's just showing me that that is a strong rejection, resistance, and it probably would have collapsed as it did just a few minutes ago. Now, because it closed above, I know it wants to go higher. period. Where? To the previous range. Because, oh, guess what? It closed back in this range. Meaning, how it did over here. This was London's range, remember that? This is London's range. And this range that occurred during London, when the market closed with this body inside of it, it stayed in there. And it's likely for it to retest higher. So that's what it did. Now, I know some of you are pointing something out over here if you've seen my past videos. And that's where this morning I was so excited and very happy and glad that once again the rules of my strategy work. And this is one of my favorite rules, and what I like to see called A-shaped V-shapes. A-shaped V-shapes, guys, they're powerful because they tell you a lot. And what I mean by that is, if we open this in the 5-minute time frame, look at this market behavior. Strong push up, equivalent push down. Okay, when you see a very pronounced peak like that, and also to the downside, that is rejection. And actually it happened here as well. If we open the 1 minute during London, during New York opening, any minute is gonna pop out. Come on, guys, let's go. New York, there it is. Here it is. New York open. Where's the V shape? Right there. Look at that V shape. You see? Strong push, equivalent rejection. I'm not telling you that the market is showing you. I'm just helping you out understand and realize that that is a footprint. That is a clue. Okay? Let's continue. 15 minute. I want to go back to 15 minute and study. And now I'm going to help you understand why the market stopped there and why that was not a change in direction, because a lot of people fell into the trap of this being a turn in direction, change in direction, change in trend. Oh my god, gold is going to go up. It has to go up because I haven't showed you, but look at the daily chart. Daily chart is just gold melting, right? So have you ever seen the South Park episode where he goes in, I want to open a trading account, and here's $100, and he's, oh, here you go, you got a trading account, and it's gone. Well, gold is just, it's gone. Now 15 minute after, now that's it. I needed to show you that because the trend is your friend, guys. The market is not going to change direction unless there's a clear longer term broken area or pattern. And that means unless the 4-hour time frame doesn't show me like an interesting head and shoulders or broken triangle, whatever, I'm just, the trend is your friend. And there's a lot of fundamentals that's happening. There's a lot of things occurring with the dollar getting stronger and the US economy and the Fed and all that. I'm not going to go into that, but that's your homework as a day trader. Okay, let's go back in the 15 minute. I don't want to make this video too long. I'm going to close it soon. I want to end it soon. I want you guys to have this information easy to grab, fast, quick. Time is money. Okay, check this out. 15 minute. I'll ask you something. Have you ever opened a trade and put a trailing stop? Or have you manually followed the market and change your stop trailing the market, your stop loss, right? If you haven't done that, many people do. And many people that were in short trades from all the way up here and who have had their objective already reached anywhere within this longer term range, they have placed their stop loss here. And what is a short position stop loss translate to? A buy stop order. That being said, and if you've seen my past videos, and if you haven't seen my past videos, I'm going to put them at the end of this video, but go back and check them out because we talk about these areas as liquidity areas. You might have learned as an order block. I'm repeating myself. But that's what happened. And that's why all this has happened. That's why that happened in the morning. Why? Because New York, I'll go back and show you, New York retests London's high and it wants to go back to their previous highs because there's liquidity here to grab to follow the trend, the downtrend. And that was a liquidity grab because this is an A shape. That was an A shape. We saw the A shape forming in the even in the 1 minute. Even if you saw this here, after you've seen this, that's a clue. That's the footprint. You don't have to go back and break your head with other candles and other prices. No. A shape, go low. V shape, go long. High, whatever. A shape, go short. V shape, go long. To finish off, why does it stop right at that point? Because if we go back over here and I'll clear this to you so you can understand. This was a imbalance between that wick and that wick. And that's why here the market also went into that range. And that's why here the market goes to that wick. And it respected perfectly. And that's the beauty of having a trading strategy that works. How could you have traded this? Well, after you've seen this happen, you don't want to risk it for the biscuit because you could lose. I'll explain myself. Had this candle closed above this resistance, that could have just meant that the market would probably retest once again that high, and we never know, maybe break it, or decide to just come down again and maybe consolidate here. So you could have said, okay, I'll wait for this candle, again 15-minute time frame. If this candle closed above that resistance, meaning it would have created that support, then we could have gone long to that high right there and get an easy scalping in and out, right? Because it closed in that range again, where does it want to go? I know you know this already because that's what happened here when it closed inside. That's what happened here. I'm sorry, that's what happened. When was it? Oh yeah, that's what's happening now. That's closing between this higher time frame range, right? This higher longer term frame. Look at that range. I'm sorry. So you could have said, okay, I saw this candle close. Now this is my opportunity. That wick right there, that little push to the upside, that's where you could have gone short. But as a matter of fact, there's a better way of seeing this. 1 minute. 1 minute. What happens in 1 minute? Look at this. 1 minute. We see the market right here create a flag. This is a chart pattern. Push, structure, break of structure. What is a break of structure? That this support fails to hold this candle. After seeing that candle close in there, you could have said, okay, this might be wanting to start coming down. I see an A shape already forming. Let's see what happens. Another clue, strong footprint. These wicks over here. What happens here? Market goes up, rejection. Market goes up, rejection. Market goes up, rejection. Market goes up, rejection. Rejection, boom. Confirmation that it broke a second time a support. So there you could have said, okay, this is maybe is going to want to go down. This is a better criteria with solid arguments to risk it for the biscuit. Go short. Where do you put your stop loss? Up here if you want to be conservative. Right here if you want to be tight and increase your lot or whatever your position size. But yeah, and then notice how that gave you a second chance. This is like, okay, you wanna come in or not, and then whatever. So yeah, that's how you could have traded this in the short term and live. And that's it. I hope that you have cleared your mind and many questions. I'll give you a bonus. What can we expect now? Right? What can we expect now? Well, honestly, right now, I wouldn't I wouldn't do much because the market is just at its low, so it could create a double bottom and stop there. Now look at that wick, awesome. I mean that candle, it just engulfs all of these. So this is very strong continuation, and it's continuing to drop, and it does close under these supports. So I know for a fact, because that's how it happens and that's how markets move, that it wants to retest that wick. And there's no point in selling right now because it's just risking it, because like I said, this could go in and back up very quickly. And so unless today the market is not, which by the way it's Friday, so don't risk anything just for a few hours of trading left. But unless it doesn't close that uh, under that support, the market is just gonna probably range anywhere between this, you know. Um, so yeah, that's what could happen next week, or next week if it fails to close, then it'll probably close. It'll probably like break finally and continue pushing down. Okay, that's about. I mean, there's no certainty there. Okay, but yeah, guys, that's it. I'm gonna leave it right there. I hope that this video helps you a lot. Subscribe, share, comment, whatever, like it, and I'll see you next time. Have a great weekend.